Hey guys, M1 to 5 here, and in this video I'd like to start a new series just tracking the progress of this M1 Finance account. Now if you're unfamiliar with M1, I highly recommend you check it out. It's a fantastic platform for long-term investing, not least of which because it's free. There's zero commission fees, zero account management fees. M1 also supports fractional shares, which opens up a whole new world of investment possibilities, especially for those with a smaller amount of money to invest. And full disclosure here, well, I'm not getting paid by M1, I'm not getting any kind of kickback for talking up the platform. If you do use the referral link, which is in the description below, we'll both get an extra $10 credit. You certainly don't have to use my link, but if you do, of course, I will greatly appreciate it. And with all that said, let's move on to the portfolio. So this is a regular taxable account, and while it's not one of my primary investment accounts, I do still contribute to it pretty regularly, at least 10, 20 bucks a week, sometimes more, just depending. So hopefully you'll still see some significant changes from week to week or however often I do these videos. I haven't really worked that out yet. But hopefully, it'll be a little entertaining and educational along the way. Anyway, as you can see, the account value right now is $2,059.28. Total return of $166.43, which comes to 17.97%. Swiping over, you can see that this account has been open for a little over a year now, and $146.71 of those total gains came from market gains or capital appreciation, and $19.72 have come from earned dividends. And now swiping back over, let's take a look at what's actually in the account. Alright, so the biggest holding I have here is VOO, which is Vanguard's S&P 500 ETF. Then we have VYM, which is Vanguard's High Dividend Yield ETF. And the two of these together make up right around half of my total portfolio. And now we'll move on to individual stocks. We've got Disney, and then Microsoft, Apple, Visa, McDonald's, Johnson & Johnson, and MasterCard. Alright, so now that you've seen what I have, let's talk a little bit about strategy. So as you can see, half of my portfolio is dedicated to broad market ETFs, and these serve a couple of purposes. One, it's just a hedge against mistakes that I might make with individual stocks, but also it serves as a kind of benchmark. So any individual stock that I buy, I want to be able to beat that index. I want to be able to beat the benchmark. Otherwise, what's the point? I might as well just be invested in one of those ETFs, right? And so moving on to the second half of the portfolio, what I have here is just a small selection of stocks that you probably recognize. They all have very strong brand recognition. They all have very strong competitive advantages. They've all been around for a while. They provide fantastic value, and I think they're going to continue to do that for many, many years to come. Now, down the road, I may decide to add another stock or two, but for the most part, I think I'll keep it pretty small. I want to be able to outperform these individual ETFs here. So the more I add, the more diversified these individual stocks get, the closer it's going to end up performing along with the market. And I don't want that. I want these stocks to outperform the market. And so with that in mind, let's talk a little bit about how I'm investing in the portfolio. So as you can probably tell, I'm not just using auto invest. It's not even turned on. Basically what I'm doing is contributing consistently every week, whether it's $10, $20 or whatever. But I'm not just funding the entire account. I'm targeting whatever I feel is the most undervalued at the time. So what I'm doing is kind of a hybrid between value investing and dollar cost averaging. And so one week I might just buy Microsoft, and the next week I might just buy Apple, and the one after that I might get, some Visa and some McDonald's. It just depends on whatever I feel, like I said, is the most undervalued at the time. And of course, there'll be some weeks like this one where the whole market is down. And so in addition to whatever I'm targeting individually, I'll also put money into the ETFs. All right, guys, I think that's going to wrap this one up. If you have any questions about this portfolio or M1 Finance in general, please let me know in the comments below. I'll leave in the description a link to this specific portfolio if you'd like to use it yourself. And if you like this video, please give it a thumbs up, subscribe if you'd like to see more, and I'll see you next time.